Hey everyone, it's Nick with Us versus Herd. If it's your first time here and you like the content, hit subscribe. If you want to get notifications for when we go live Monday through Friday, 30 minutes after market close. You can click tap on the bell. If you want to connect with the UVH fam and our community, hit the links below to our free options trading group along with our Discord. We got quite a few people here right now. We're just going to see what's going on here. We got FC was the first one here today. Then we had PB. Testing one. I don't know who that is, but welcome. Shreep, what's going on? Jeff, Josh Arnold, Adele, Garrett, Billy, Josh Reed. We got a lot of Joshes in here. Maureen, how you doing? Nice to see you here. Brendan, Shotgun, Dovey, what's up? Eric, not big in chatting, but I'm a good listener. Yeah, there's a lot. There's a lot of people that kind of just like hang out in the background. I feel like, which is fine. Like for me, I'm more of like a background kind of guy. I'm more of an introvert type person. So I see the value to that. I see that. Jimbo, what's up, Mr. Warno, Hafiz. What's going on? What's going on? Glad we're here. It's Thursday. We're almost through the week. Yeah. If you're new here, say hi. Just working through the day here. Kind of a weird, interesting day. Chicken wing. Jalen, man, I see you around. I see you around. I see you around Facebook and stuff. I see you. Let's go. Testing 1, 2, 3. Chatting, what's up? Francis, and a lot of people in here today. Hope you all are doing well. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Let's see here. It's crazy he decided to start a car company when he could have easily retired with that PayPal money. Yeah, that's Elon getting the snowflakes all over his face. Oh jeez. You know, if you can't have fun, like, you know, if you can't have fun, really, what's the point? Josh Reed, glad you're here, man. Glad you're here. T5. Josh Arnold learned. Billy got paid, learned a lesson. FC negative 38. Yeah, so for me. I actually just was trading one account today, surprisingly. Normally I'm trading up to 4 accounts, sometimes at 2, sometimes, you know, whatever. But today I really was just trading one account, like on, I was just trading Tastyworks on Thinkorswim. On Thinkorswim it says I was down $52, and mainly I'm down the $52 because Walmart just didn't go anywhere. You know, Walmart, they just crushed it again. So I have the 100 put. I'm sorry about that. I have the 100 call, and what do I have on here? 100 call and 96 put. And you know, when they crush premium like that, you think the premium crush is done, but you can see, man, this premium has been on a steep drop here, and they just continue dropping it. But I'm not too concerned about the position because I didn't do anything with it. It's still right where I bought it yesterday. You know, I bought it right around like 99.50. It's at like 99.31 right now. It's just the fact that they crush premium. I don't have this position on. I actually moved it out till you know, next week. So, you know, when some days you get flat days, but if you still believe in the position, I was actually surprised they crushed premium in there. So I paid like $1.30 for it, and they took out $45 out of that. So I was actually up on the position yesterday. It was only like $7-8. Yeah, seven, you know, 45, 52. So I was up $77 on that. You know, just insane that just the flatness would cause that much premium to be sucked out of there. So, you know, you definitely have to be careful in this type of market. You know, I'm just multitasking here. Give me 1 second, guys. Just give me 1 second, and then I'll talk about. I actually, on my Tastyworks account, I lost $200 on it. It's not funny. Well, I mean, it's not bad, but we'll get it back. We'll get it back. So, anyways, so let's go to Tastyworks. Tastyworks is where I did all my trades today. As you can see, it was a pretty filled day here. We were starting the morning off pretty good today. I had a 20% winner on SPY, and then I think we overtraded SPY a bit. I got out of that Tesla 305 call right before the little red candle came. Yeah, so nice, William. Alex got paid on VZ. Just moving some things around here. So SPY, we had a nice trade on. I put it on for 79 cents. I bought the 277.50 call this morning, and then I sold it for $1. You know, when it went up, so I bought it at 9.48. I sold it at 11.01. Just on that slow grind up on SPY here. You know, I bought it down in here when it was consolidating, and then when it was ripping up here, you know, I cut it loose. I cut it loose a little early. I cut it loose right in here. It was like 277.70, somewhere around there. But like on a day trade in this kind of environment, 10 to 20% is actually pretty good. 20% is actually more than probably what I should have got. I probably should have just took like the 10%, 15%, but it immediately jumped up to 20%. You know, definitely glad that I sold that and locked in those gains. But you know, once you have a little taste of the winning, you know, you went in for a little bit more. So then when SPY was kind of creeping up here to 278, I thought it was kind of bust through. I thought we were going to have another one of those red to green reversal days, and right here it just stopped. So I bought the 278. I bought the 278 call for 76 cents. Got stopped out at 46 cents. So we took a $30 loss, which negates the gains that I made on that other call. So like, what I would say is, in this market, if you won on some trades and you exited, you had a nice trade, you exited, got out, just stop trading that product, move on to something else. Is kind of what we're taking away from this, because it really just cuts down on your profits. Like what's the point? What's the point of trading and making profits if you're just going to give them away in one trade? You know? And then things got a little crazy. I'll go over Tesla and GS. I'm just going to go trying to stick with the tickers then. And then I bought the I bought the let's see here, the 278, and then I bought it back for 46. Yeah, that's correct. And then I bought at 129. You know, probably wasn't very wise of me to try to catch this dip here. You know, and I think we talked about this yesterday, and I didn't learn my lesson that, you know, catching the knife has not a winning trade. Just wait for it to settle out. Like the last couple of days, catching the knife has not worked out, and catching the knife, to be honest with you, hardly ever works out. So I don't know why I did it. You know, sometimes you do things that you just don't know why you did those things, and I did them. You know, KZ Noel, what's going on? So I tried to catch the knife. I bought the 277.50 call, and then it ripped down, and I got stopped out for $17 loss, sold it for 40 cents. So not a big deal. But then, as you can see here, if you were more patient, you know, you probably could have got out this. Like with the 277 call, I think it was going at like 70 cents right now. Let's look at this. The 277.50 call, yeah, the 277.50 call is going for like 67, 68 cents, between 66 and 69. So that was you know, it is what it is, and that's what overtrading looks like. That's what overtrading looks like, you know, trying to trade too many of these candles when you really should just how, like, my initial idea for the trade was to put the 277.50 call on and actually swing trade it until tomorrow was my original goal, but I already was up 20%, so I took it, and then I got a little greedy. And you could see, like, when you're trading with greed and emotion, you could see that it immediately cost me. I had gains in SPY, and then I got greedy and I gave him back. Like, what's the point? Yo, Kit, what's up, man? Glad you are here. So, you know, what's the point? What's the point if you're going to lose money? I mean, you could just not trade at all, right? So, you know, SPY I've been trading fairly well over the last few weeks. It's just that we went in too much. We went in too much. On the second like. Dovey with the second like. Josh, the knives got you? Yeah. Like that smash button. My brain hurts when I say that. Like the smash button. You guys are crazy. And that leads to the trade that I think that, so this morning things are going pretty well. We locked in some SPY gains, and then I put on this Tesla trade. I put on the 305 call, and really what I liked about Tesla at the time, let's look into before the drop. So before the drop, you know, I've traded, this is a very typical setup for me where, you know, let's say we had a drop at open, or, you know, whatever, you know, there's a drop, and let's say, you know, the market's in a bullish in a bullish mode right now, and obviously, so you buy the dip, stuff like that. But when buying the dip, I personally look for certain indicators, and this was one of them where, you know, I was being patient. I was letting the candles close, the 15-minute candles close, and the lows kept getting higher. You see, it kept trending higher. And usually, like, if you're trading like tech stocks and something like this, and you can kind of see the same thing here with SPY. You know, the lows keep getting higher, and then it pushes up. So very typical chart. You know, my goal for the trade, I was going to buy the 305 call. I bought it right around 300, and I was liking the 300 area because back here at 301 on this day, a couple days ago, found at 300, 301, bounced from 301 to 307, and then we had yesterday we were down in this area again, bounced from 299, 300 area up to 302. And so we were down in this area again, kind of retesting. And however, this chart looked a lot more bullish than most days, right? So I was trading this, and I wasn't really thinking that anything was going to happen. My goal on this trade, what did I say on Discord, like to hit the 304, 305 area, and really I was looking for the 303 area, not getting greedy because I didn't know if it was going to get above the high of the first 15-minute candle. So we're chilling at the, you know, sometimes it struggles to get over the high of the first 15-minute candle. So I was looking for 303. I was profitable on the trade, and then out of nowhere, Consumer Reports says they're going to drop the recommendation. And if anybody's traded Tesla before, they know that these reports come and go. Good news happens, bad news happens, and the stock, you know, takes it a certain way. And most of the times, like when the Consumer Reports and stuff like that comes out, like sometimes there's a big fluctuation is really why I didn't sell. And a lot of times it'll come down, it'll recover, then it'll go back down, it'll recover. So I thought that maybe it would come down and I can get out when it comes back up or something like that. But that was not the case. So, you know, this is one of those rare circumstances that I was only buying a call, and most of the time I hedge myself. I hedge my positions. I buy a call. I also buy a put. If I'm bullish on it, I'll skew it to the bullish side. If I'm bearish on it, I'll skew it to the bearish side, as long as the option pricing works, right? And you know, it was a small trade. I was only trading on a one account. Cost me $1.30. I was already up on the position. If we're looking at the 305 call, let's go to let's pull up this 305 call. I mean, this was when I bought it. You know, if you're looking at the option pricing here, when I bought it, you know, came down from about $3 in the day, and it was really stabilizing when I bought it. So I paid $1.30 for it. It was right in here, maintained that price for a while, and then it picked up. You know, when it picked up on when it was trying to get up to 302, is when the report came out, and then as you can see, it just bombed from $1.50 down to 22 cents. So what I was looking to actually do on this, but I was trading on my cash account instead of my margin account. I probably should have traded this on my margin account, but I honestly didn't think that was going to happen. But that's the stock market. You never know. So what I was going to do is I was going to, if I was trading on my margin account, what I was going to do, I was going to sell the 305, I mean, sorry, the 300 put, 300 call, and turn it into a call credit spread. And then at the time, this was going for like $1. So we could have rode this down until tomorrow, and it probably would have made some money. You know, it's down 50% from where it was. When I was looking at it, it was like $1, and I was down like $80 on the position on Tesla. So that would have been the play to. What's going on, Baron? That would have been the play to get out of Tesla, you know, unscathed. But I did average down the position because I thought that we would get a bounce up, but it just never came. So I averaged down. So I initially paid $1.30, averaged down for 38 cents, and now it's like 25 cents. So, you know, at this point in time, you know, that's all the money that I want to put in the trade. We will get our money back out of Tesla. I don't know if it's going to come tomorrow, but we will probably trade it next week because, you know, with this volatility in Tesla, it's going to create opportunity. Just because, you know, you may lose, like let's say a stock starts getting some volatility into it, kind of like this Tesla trade here, and you lose on the first one, it doesn't mean that you're going to lose on the second or third one. It just means that, you know, you got to protect yourself going in. So let's say you were still bullish on this, even though Tesla, you know, probably wants to come down to 280 now, to be honest with you. So to kind of get right, what I usually do, which I did today, was I've traded something else. I put another position on. I put a GS trade on. I bought GS for $1.28 for tomorrow. The 195 put and the 197.50 call. So I mean, yeah, I mean we're gonna lose $150 on Tesla, worst case scenario, but there's opportunity there, and there's opportunity to make that cash back. So with GS as kind of like my hedge for tomorrow to kind of get some cash back, you know, I traded. Let's go to GS here. Where's my down? Let's see here, $1.18. Going for $1.18. So I'm down 10 cents on the position, which I mean makes sense considering that it's pretty much the same price that I paid for it. My goal was for it to go back, revisit 199 area or revisit kind of 194 area down here on GS. It's kind of had some crazy moves the last few days. Obviously, if it has a day like yesterday, we're gonna be some trouble on that position. But you know, we'll see. We'll swing the position. It looks like the market wants to have some volatility in the market again. You know, with some crazy with some price swings and stuff with the volatility on the indexes and some of the other stocks. So you know, if volatility returns, we shouldn't have any problem with this GS position here. But when I'm selling these, when buying premium on these, like let's say these $2.50 wide strikes, like for the 195 and the 197.50, you know, I would prefer, I like it when it's like in the middle of those strikes to sell a strangle. Then you get pretty good pricing. So it was like a 196 area, and I strangled it, you know. And I'm looking for the 194 or 199 area on this one for tomorrow. So, you know, that pretty much sums up my trades for the day. Sums up my trades for the day. Yeah, we could look at BA. If it drops another $20, I'll swing it again. Tesla, yeah. I mean, Tesla's a good stock to trade, even though sometimes you get blindsided by news events. So like, let's say you have a position, and this happens a lot by when there's the elections. If you never traded an election before, this happens all the time. And when it's election season, like come 2020, you're gonna have to, when you're trading, you have to be protected because, you know, let's say you traded if you guys remember the 2016 election, CNBC could put out a report on Hillary Clinton, send the stock market up crazy high, and screw your short positions. And then when they had a piece about Donald Trump, the stock market would tank, and then, you know, so you had to be careful. And when I call them like hit pieces because it really screws your position up. And the consumer report news, I don't think is going to really have that much impact, you know, to it overall. I've traded Tesla on these reports many times, and Tesla most likely will recover. It just, I don't know if it will be tomorrow or next week or 2 weeks from now. So with options, you know that you have to have the timing right. So that's the hard part with trading options. So if you're not sure and you're looking for a trade, give yourself some more time, you know. Don't put all your eggs in a basket of a stock that jumps over a tweet. Yeah, don't worry, Kit. We traded small on it. We you know, like I said, I only traded this on like one account, and we didn't go too deep. We didn't go too deep. We'll salvage that that 150 out of Tesla if that comes to that. But the one thing on Tesla, what I was looking at was, when it was kind of coming down, I was looking at adding a put, and I was looking at the 290 put, and I didn't do it because I was like, well, for a strangle, I was like, I don't want to do a 305 call and a 290 put. That's like a $15 range, and it expires tomorrow. Like, that seemed like a lot more risk. And at the time when I was looking, it was like $1.30, like right in here. And obviously, if I did buy that put, we would have been good. You know, we would have been able to exit that trade. I would have got my loss back, and I also would have made. We would have made about. Actually, it would have been break even. It would have been break even. So we would have got saved. But I was like, well, I don't want to have a $15 wide strangle going into tomorrow, so I just kind of left it. But that's kind of shows you if you trade unprotected, like let's say you just buy calls or you just buy puts, but if you do a strangle, like you have to make sure that the option pricing is there. And it's been difficult to do strangles because the volatility isn't there, so you're going to overpay for the position. And if the stock doesn't move the direction that you want it to go in, or doesn't move at all towards any of your strikes, you're going to be in trouble. VTech asked for BA first, and then Shotgun, Dovey. I will do Dropbox. So let's look at. And at the end of the day, like you could. Going back to Tesla, like going back to that news, like you could be like, oh man, that, you know, you can get angry about it. You could be like, you know, Tesla really screwed me, or consumer reports really screwed me. And a lot of people blame the stock or the news outlet or something for screwing up your position. And if it really hurts you that bad that you're so angry, you're probably trading too big of a position, and you're probably not trading the most protected. And for me, like, I can't be angry about it because I was trading those calls unprotected, and at the end of the day, it's my fault that I didn't hedge those with some puts, you know. So you can't be mad at anyone but yourself. You know, people like to shift blame, but really it's your fault when you lose in the market. It's your fault that you put the trade on. It's your fault, you know. Even if you get blindsided, it's still your fault. Because you should plan for all scenarios. You know, if the trade goes against you, what do you do? If the trade goes for you, what do you do? You know, some people, like if the trade worked out, let's say Tesla was going to 305 and I had the 305 call, some people would say, well, it hit my initial target, I'm going to push my next target to 310, and then it goes up to 307 and comes back down. People get greedy and they lose their money. you know. So that's the scenario. So BA, Hamed, what's up? You missed my trade recap, but you can, if you're interested in it, you could hit it later. BA we talked about yesterday, and in terms of the 52-week highs, excuse me, it keeps pushing 52-week highs, it keeps breaking 52-week highs. So like in a bullish market, and like if you guys remember when we were keep hitting new all-time highs, like every day, every week we're hitting new high on the Dow, new high on the S&Ps, new high on the NASDAQ, stuff like that, right? And a lot of the times in a bullish market, when we break through 52-week highs, it'll keep doing that, and that's what Boeing is doing right now. Not Bank of America. That's what Boeing is doing right now. In a bullish market, it keeps making new highs, even though today, you know, it reached a new 52-week high and sold off, you know. But I wouldn't, you know, with this type of bullish action on a down day like today, I wouldn't be like, oh, I'm gonna go all in on puts and go crazy, like, because in a bullish market on days like today is when you load up, like when you put trades on, you know. Most people, you know, in a bullish market, people are looking for days like today to put positions on. And, you know, if we're really in a bullish market, days like today are good opportunities to put positions on. And, you know, same thing for Boeing. But like, would I buy the stock right now here? Probably not. Probably not. Would I buy it around 350, 360 in the middle? Well, you know, I would feel more comfortable buying here. You know, trading options here, you just got to be careful. You know, trading safely is just going to cost you a lot of money. You know, Boeing options, you know, going into next week, I mean, it's pricing an $11 move, which, I mean, it could happen. You know, this week it moved like $13, $16, you know. But I don't know. I don't know if there's a catalyst for it to come down, if that's what you're looking for. Dropbox, and then Jimbo, we'll look at PCG, and we'll look at PayPal. Let's go to Dropbox for Dovey here. DPX. DP. I don't think it's DBX. I don't think, is Dropbox really that liquid in terms of options? Yeah, their liquidity is okay. Their liquidity is okay. I think did they have earnings today? Did they have earnings? They're having earnings right now? Okay, so they have earnings right now. So they beat estimates here. Dropbox, I mean, it's a slow mover. It's a slow moving, boring mover. Like if I was gonna trade this, I probably would just buy stock and hold on to it. You know, to be honest with you, you know, trading options on this, they're gonna bleed you out. It's gonna be tricky. You know, I would probably just buy stock on this, being $25, and if it got up to 50 or $40, I'd probably sell it. You know, there's not enough volatility. There's not enough volatility in here unless you're looking to make like 10 to 20% on options. It's going to be tough. And the expected move on this thing was $1.80 for earnings, and so far it's only moved, you know, it's moved less than $1 on earnings. So that's, the option pricing is going to be overpriced. And even if you bought a put and went down, you're not going to really make that much money. Sound tired today? Let's see here. PCG, and then we'll talk about PayPal. PCG has been a stock, so I actually traded it for a little bit, and I kind of swore it off just because it doesn't make any sense. However, you got to understand with PCG, it's 80% institutional owned. Supposedly they filed for bankruptcy, and you know they have no money, but you know the people are buying. You know the stock is obviously going up. I mean from $5 to $19 in what was it, January 15th? So like a month, 6 weeks, 5-6 weeks. You know, it's like, boss, see you later, man. It's insane. It's insane. And I think that I don't think anybody really understands why it's moving that way. Apparently, maybe more institutions are buying more of it because they think that it's not going to go out because of what it provides for California. So, you know, at this point, you just got to get on the train, on the bull train, and ride it if you're going to do that. I mean, what worse news can you have than bankruptcy and still go up? You know, like if I said I was going to declare bankruptcy, I'm pretty sure like no banks would want to touch me. You know, they're like, oh, we're not going to give you a mortgage, we're not going to give you money. But apparently, if you file bankruptcy for PCG, you still go. You know, they're gonna want to give you money. So I guess the only way to trade this is go with the bulls and ride it. I don't know if it's going to go back up to 50, but I mean that's just the way it goes. The city upgrade helped big time, yeah. So if that's what you want to trade, I mean you could trade that. I mean it went from 15 to 19, pretty good trade. Next week, let's see, it's pricing in the options at a $2 move. So if it can go higher, then if it can break 20 here, probably can go to 25 next week if it has momentum. And it looks like it has momentum. You just got to be careful. Like if you're looking at like the 15 days, these down days really will crush your premium. Like right in here, like these 3 days in here will really crush your premium. And obviously you can't tell the future, so you don't know if like these 3 days is going to turn into 5 days of flatness, 6 days of flatness, 8 days of flatness, you know, and then just crush your premium all crazy. But then you're like, well, you don't want to sell options in here either because then it moves. So I think the best bet is to, when it's flat, put a trade on. If you're bullish on it, buy some calls. When it's flat, premiums crushed a little bit, and then ride it the best you can, and then see how it goes and defend your position if it goes against you. Andres Velasquez, we can do J&J. Just going back through some of these things. Sold by Microsoft calls way too early. Yeah, Microsoft ripped. Brendan wants to talk about PayPal real quick, but I do want to look at Microsoft too. Sorry guys, I'm just going through the chat. Guys are lively today. I don't want to miss anyone. PayPal's a tough trade here this week because it really has gone nowhere, and it shows. But I mean, this could just be consolidation up here. I mean, it hasn't really dropped. I mean, it was green today. I mean, only by 23 cents, but I mean, just looks like some healthy bullish consolidation. So yeah, I mean, it could definitely go to 100. I don't know if that's the all-time high. Yeah, I mean, it's like at an all-time high right now. So I mean, I know PayPal's doing well as a company, but in terms of tech, is it really value? Is it really worth the market caps right now? It's hard to determine that. I heard Tesla has a big payment come up mid-March, $900 million. I don't know about that. X. Someone should queue a line for requested ticker symbols. Yeah. 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 So steel, I don't know if you guys trade steel that much. I guess VTech does. Yo, Rob G, what's up? I mean, this one, I guess you just buy calls and you hold it, but you gotta if you're gonna trade steel, you're gonna want to do something like, like these monthlies, 22 days out, or go out to like 56 days out or something like that, because you guys, these slow movers like IQ and all that stuff, like it's hard to trade. You have to be patient on trades like that. So it definitely does look bullish. I think that it could probably go to like 27 here. Now that it broke above this 24 around here, we could probably go 27, 28, but you have to be very patient with it. You're going to have to be very patient with it. Is it good to hold for long term? Terry, what are you talking about? Microsoft or something else? Microsoft was very interesting in terms of its movement today. I mean, had some crazy bullish movement. It just I trade Microsoft a lot. If you guys watch my videos or you guys been on the live stream, and I recently took a break because the volatility has been so low. It hasn't been going anywhere, and then it just took off. Today and didn't come back down. It had a very bullish close here. I mean, it's just insane. Microsoft really needs to get above 112, 113 here to be able to make a push for the highs here. Like up here has been very dangerous for Microsoft, but today it had some legs. Wish I traded it. IQ for Baron. Yeah, Baron, the same thing basically for X. See, they had their earnings come out as well. It's yet to be determined. We're expected to have a $1.76 move. So far, it's gone nowhere. It's pretty much there. So it's going to eat your premiums up. If this ends up being kind of bullish, I don't know. I don't know what they reported, but kind of the same like X. You just you buy calls like further out and ride it. Day trading this or swing trading this is going to be very difficult with these very low volatility. Andres, let's get G. Wayne, how you doing? J&J, let's talk about J&J. Johnson & Johnson, they look like they're just recovering off that talc, how do you say that? Talc in their powder. Didn't reflect their earnings. I mean, as bad as it is, we know for a fact that companies that they don't have our best interests. They care more about their bottom line than they do us. And are people boycotting Johnson & Johnson? They said they were, but they're going to forget about it. And they don't. I want to say most consumers don't really understand how many products Johnson & Johnson has in the market. They may not buy the baby powder anymore, but they could be buying all these other products that Johnson & Johnson makes. I mean, Johnson & Johnson is a big holding company for a lot of products, right? So they should care about their baby's bottom line. Yeah. But I'm saying, a lot of consumers are ignorant to the fact of what these conglomerate companies actually produce. They may not buy Johnson & Johnson baby powder anymore, but they're going to buy other stuff that they don't understand, So it's gonna be tough. T5 Amazon analysis, yes. Terry, is gain good to hold for long term? Is it a monthly dividend stock? Gain, I don't know. I never heard of Gain. Looks like they do pay dividends out. Gladstone Investment Corp. Yeah, I mean, it's pretty crazy. But yeah, it looks like they're paying out a 68-cent div. So yeah, I mean, that's where you want to put your money. Doesn't look like a bad place to go. I mean, I don't know. I don't know about up here or what actually is this holding. So you might want to do some research on it before put your hard-earned money in there. Just because it has a dividend doesn't mean it's going to be good. How am I liking my Tesla? Tesla burned me today. Well, I wouldn't say Tesla burned me. I would say that the chart worked perfectly, but then Consumer Reports burned Tesla, which inadvertently burned my trade. All right, T5, Amazon. Yeah, Amazon is, I think, is in a scary place, honestly. My personal opinion. I've traded Amazon probably thousands of times, but I haven't been trading it recently. in the probably I haven't traded probably in about 8 months, 9 months, somewhere around there. And I the reason why I stopped trading Amazon is because I didn't understand why it's valued the way that it's valued. And it had, we made a lot of money on the up climb. We made a lot of money when it went from 500 to 1,000 and 1,000. I just didn't understand this climb from 1,000 to 2,000. And you could say like, you should just get on. But like for me personally, it's hard for me to trade stocks that I don't understand why they're being valued at this rate. Why they're being valued at this. For me, like when I'm trading stuff like Microsoft, or I'm trading stuff like Goldman Sachs, I'm trading stuff like that, I have some understanding of why the stock is valued that or not valued that. And, but at the same time, like, well, if you don't believe in it, maybe you should short it and stuff like that. But for me, like, you don't short Amazon, you don't short Netflix, you don't short those kind of things because the valuations don't necessarily need to make sense. But what I would say in here, I mean, it definitely looks like bearish consolidation where this could easily come back down into, the 1400s, 1300s, 1500s, it looks like it's just pushing lower ever since it reached up here, this like double top up here at 2000. It looks to be in a descending fashion. However, I mean, this could easily break out, but I mean, earnings is over with. It pushed it up, but it didn't do anything. It's back in this consolidation area. So whether this could really, we have to see if this is a consolidation and it breaks to the upside, or if this is a consolidation and it breaks to the downside. Right now, it's like, well, do you just want to wait it out and bleed out your options? Like Kit loves selling the Amazon options. This is great. This is great for selling Amazon options. High price stock. It chomps up that theta pretty good. You can make a quick buck. But once volatility picks up, you can really F yourself. So, whether you're buying options or selling options, there's no such thing as free money. There's risks. There's risks in everything. Yeah, well, I don't know. I mean, if you're playing the lawsuit game for J&J, if you're playing the lawsuit game, like, you have to understand lawsuits take a very, 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 very long time. So just because they are getting sued or in lawsuits or stuff like that, and people kind of load in and say, we're going to short this company, it could take years for that lawsuit to even come to any idea or impact of the stock, And it would have to be like a huge fine for it to impact the bottom line, and then that could take years, and then they're going to repeal it, and then they're going to do all this stuff. So it's like, I don't like to trade lawsuits and stuff like that because it messes with your mind, and your short term for options trading is very short term. I mean, if you're buying stock, probably like, you probably don't want to buy stock. But if you're trading options on it, I mean, it's probably not going to have any impact in the immediate future. Thanks for keeping it PG always. Yeah, YouTube says you gotta keep it PG in here. Otherwise, they do crazy things. Lost too much on AWS. Why? Well, how do you lose on AWS? You talking about like spinning up too many servers, or you got hacked and they spun up something on your account? I can see how you could lose on that. Race, VTech, Race. I got you. Race, Ferrari. Are you trading options on this? I don't know if anyone trades options on this. Yeah, not really anybody. Yeah, I mean, I wouldn't trade options on this because it being so illiquid, and the volume is just like, I don't know. I mean, it could be good, but I mean, literally the stock goes nowhere. Hasn't gone anywhere all week, and the volume is low. It wouldn't. I mean, I wouldn't like to trade this. I mean, this looks, I don't even know what to say. it's just anyways. Yeah. Agreed, William. Just you just wanted me to do Ferrari. Yeah, I mean, it looks like the stock moves, but like, I mean, what's the risk on these options? It's probably like, people are shorting it. It looks like it's skewed. The puts are pretty skewed, but the there's no volume on these calls, and there's no volumes on these puts even for the monthlies. So, like low volume, you just gotta be very cautious of trading it, because you could easily get hurt. Gotta be ready to take off trades ASAP. Yeah, Kit. Luis, CBS call. Let's check it out. CBS had earnings yesterday. I was actually looking for a trade in here yesterday, but it was just so flat. I don't know if you were here yesterday. It was just so flat yesterday. I mean, it only went up or down like a buck all day. But it did come down, but it seemed like the selling is continuing. So, I would say it's down here at the lows. I would probably see if it can crack to 60 before going long on this bad boy. If we can get to 60, let's see what the 2-year chart is on this thing. See where the next. Yeah, I mean, if it can come down here to 60, probably would be better. It has bounced around 62 in the past. 60 would be a better play, long play. Like if you put a trade on, you could put a trade on now, and then if it comes down to 60, average down, and then it bounces up, you might be in good shape. So you can do that too. Buy the dip on race, hold forever. Take it with you. So if there's losses, they're never realized. Think of Warren Buffett. I don't know, man. At the rate it's going, Warren Buffett may just outlive me. He's probably got some like bionic heart or something that's gonna keep it pumping forever. It's like VTech. I'm not looking up any stock that has a Q at the end. If you got a Q at the end of the stock, I'm not gonna even type. I'm not gonna waste my time. Snap. Yeah, Snap had good earnings, so now that earnings is out of the way, it's just a slow grind up. It's just like these penny stocks or single digit stocks. It's just so slow. They need a catalyst. I mean, I think that Snap was going to go up. It's probably going to go back up to like the 12 area, but at the rate that it's going, it's not a trade that I would do. But if you are trading with low capital, you could easily, I would say, put on these like March 9.5s or go out to like April, buy these April 10s, and you'll probably make money on them. It's not a bad. I mean, it's not a bad chart. Little pullback. Today is up 2% almost. It's just, as you can see here, it's just slow. Yeah, welcome, Luis. If you're new here, say what up. Almost got him. BTech, you're not going to get me, man. Not today. I may not have been on my game with all the trades, but I'm on my game with the Qs. Snap might be a good long-term cover call strategy. Yeah, and the thing about Snap is I don't. What are they going to do long-term if you're looking at Snap? Like, are they going to compete against Instagram at this point? It's going to be tough, and they don't make a lot of money. Actually, they lose a lot of money. And can they turn things around? Sure. How long is it going to take, though? But I mean, they've seen $4, and now it's $9. I mean, that's 100%. That's a 100% win right here for them. So they're moving in the right direction. It just was a lot of pain. But if you guys remember when Facebook first went public, I don't know if you guys are trading that. I mean, that stock when it first came out was hot garbage. It was like the worst IPO in history. I think they unfortunately have that title, which I don't know. There might be some other ones that maybe took that title now, like. Last year in 2017, IPOs didn't do very well. IPOs have not been doing very well, and also I guess Lyft is about to IPO within the next week or so. So get those puts ready for lift. Actually, I'm waiting for Uber to come out, because I think it's going to get pumped up on Uber and they just freaking bleed cash, you know. Overall advice, Alex, for low capital trading. You're going to want to concentrate on like single digit movers like GE. I mean, GE is not the most fun stock to trade, but you do get good pricing. I mean, we went from 50 cents here, came back down, had some good volatility. Obviously, it's still the same price, but you really, on GE, to trade it, you really have to catch the moves. But you can make consistent returns if you know how to trade it. Like, every stock has its own personality, and if you understand and learn how to trade it, you'll be okay. You know, take the time, paper trade. If you have like, I guess you have to define low capital, because some people say I have low capital and it's like $1,000, and then some people say I have low capital. It's like literally $50. Like, if you have $50, don't go in there and trading it, because you're probably gonna blow it up. You're gonna want to paper trade that until you get comfortable, and then, you know, buy some 10-cent calls or puts on GE and see how you do. You know. Yeah, GE, high delta, low theta on week-long positions if you're patient. Yeah, and also you just have to catch the right move. Like, right now, it looks like the move is once it hits 10, buy some calls at 10 and it'll move up. That's what it looks like. You know, down here moved up, down here moved up, but also 1040 looks like resistance, because we've been having some issues up there. 1040 a little bit here. Actually, try to push for 11 after earnings, but it's a slow mover. Like Snap, you know, you'll want to look at Snap. You want to look at GE. You know, you're going to want to scan. You can set up a scanner if you want. You can scan for option price, and you know, if you want to scan for something, we could say let's scan for the minimum is 0.1, and then scan for like the maximum. The maximum is 0. Like 10 cents. So you can scan for options, and then you can do it like on stocks that you know, you can set the stock scanner to, let's see, you know, see what stocks have volume. Let's say you want to trade stocks that have, like, let's see here, we need 1, 2, 3, 1, 2, 3. You know, at least a minimum of 1 million volume, and then you can kind of see, you know, what comes up here. But you also got to be very careful. You know, you probably want to add another filter in there, because you don't want it. You want the you know, the stock price to probably be under like $10, but you want to trade things like above 5. So then you can add another scanner in there. Kind of, so like when you're scanning for stuff, you want to add more layers, and you don't, because it's going to give you too much information. So you want to add layers and really just kind of try to play with it that way, and see what pops up, and see what you can trade here. Someone's mad in the background. Someone's always mad in the background. Yeah, I'm at 860, 100 is liquid, and 142 is okay. So I mean, like, if you're at 860, you could probably deploy 25 to 50 at a time. You know, try to deploy 10% or less of your capital on a trade, because then if you need to play defense, you can defend that position. What's your take on weed stocks? Buy and hold. You know, the weed stocks, I think what's going to happen to the weed stocks, like if you're looking at like Cron and CGC and all that, yeah, I mean, they're dependent on regulation, and I honestly think that the entire U.S. will probably be legalized, but, you know, who knows when or what. I typically stay away from trading stocks that are based on regulation and that kind of thing. So, but right now people are putting their money in there because they're looking at the future, and obviously the future is going to be you know, the weed industry is going to grow if the entire U.S. legalizes it, and then that industry, you know, maybe it goes from, you know, $10 billion industry to a $50 billion industry to a $100 billion industry, you know. So, Hamed, we did not look at Nvidia. And Nvidia just seems to be just disappointing every day. It pops up, and then it breaks down, pops up, breaks down, pops up, break down. Except for today, it broke down from the start. Try to pop up and just broke down. And Nvidia, that we talked about this a couple times in the last couple days, is that this 160 wall is real. Like, it can't seem to breach this 160 area, and if it does breach it, it seems very short-lived, and you know, probably like 145 area. If it can't get to through 160, which it can't seem to be, like, I would probably put on like a bearish strangle on this, you know. But today the market didn't help it at all either. So, I mean, the market, but it didn't come back up with the market either. So Tesla's coming up a little bit. Yeah, if Tesla comes up, like, pulls up hard to 300 tomorrow, I'm gonna take that position off and run. Because I got 2 of the 305. So if Tesla comes up to 300 fast tomorrow, I don't care about the potential. Like, kind of like my Walmart trade the other day. If the trade goes against you and your defense works and you're break even, take the money and run. Take the money and run. So, anyways, we're coming up in here in an hour, guys. If you're new here, say hi. If you like the video, you like the content, like what we do here, hit the like button. If you want to subscribe. You know, definitely appreciate you guys. Links are below to our free options trading group along with our Discord. So definitely appreciate everyone that comes here every day, talks about the stock market. I definitely have a lot of fun with all of you. So, Matthew, don't worry about it, man. Make the food good. Make the food good. Master Chef Matthew. Yeah, hit me up. Let's play some Apex, man. Hit me up. So you guys have a good one. Have a good rest of your day. I actually got to run. I gotta chop down this this hair's getting out of control. So I gotta do some stuff. So you guys take it easy.